let's look at where we could be in terms of the gold-silver ratio. Let's say that gold did go to, or silver did go to $280 by 2032 or even earlier, with a gold-silver ratio of 31, which was the low in 2011. Gold would be at 8,680 by January 2032. That's very conservative in my opinion, but if you take a 50 gold-silver ratio, if silver doesn't outperform as much, gold would be at 14,000. So yeah, that's the way I see it.
Gold rallied while silver steadied at new all-time and multi-year record prices in Shanghai, Mumbai, and London on Tuesday. The precious metals market continued its upward momentum, with platinum, another industrial metal, also extending its recent sharp gains. Analysts and market observers attribute this renewed strength to a combination of monetary instability, industrial demand, and geopolitical uncertainty. According to Mario Innecco, the current monetary, fiscal, political, inflationary, and debt landscape is far more precarious than in previous decades. He believes this environment could accelerate a major breakout in silver and other precious metals, potentially within the next 2 to 4 years rather than the previously expected 7 years. His analysis suggests a structural shift in global financial dynamics that favors hard assets such as silver and gold. Supporting this view, Indian brokerage Reliance Securities notes that silver has surged to its highest levels in over a decade due to a confluence of factors. These include a weakened US dollar, anticipated interest rate cuts by the Federal Reserve, robust industrial demand, ongoing supply constraints, and a widening market deficit. Additionally, silver's appeal as a safe haven asset has grown amid heightened geopolitical risks and a broader trend of investors diversifying their portfolios. These elements, according to the brokerage, are collectively driving the current rally in silver. Silver prices in US dollars rose to a fresh 13-year high above $36.75 per troy ounce during London's midday market clearing auction, marking the highest USD benchmark since the one-day spike to $37 on February 29, 2012. Innecco further projects that if silver reaches $280 per ounce by 2032 and the gold-silver ratio returns to its 2011 low of 31, gold could trade around $8,680. However, if the ratio remains higher, say at 50, gold might rise as high as $14,000. In either scenario, he argues, it paints an exceptionally bullish outlook for both metals. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
What I think could happen is that things are so much worse today in terms of the monetary, fiscal, political, inflationary debt situation, that this could happen maybe in 2 years instead of let's say 7, or it could happen in 3 or 4 years as well. It's very difficult to say, but either way, I think this breakout in silver is confirming a major move in precious metals. That's my opinion. And the other exercise I did was just looking straight at gold and silver since the beginning of the century until now. And as you can see by this chart, silver has lagged, even though it's up about 578% or thereabouts. Gold is up 1,083. So if you do the calculation here, for silver to be where gold is now since the beginning of 2000, it would need to be at $56. And if you look back on this chart, silver has lagged like it did in the beginning of the century, but then it catches up. But when it's catching up and going higher, gold is also going higher. So what I'm trying to say here, by the time silver, let's say, trades at 56, gold will be a lot higher because it will also be going up. And I think it's going to be a wild ride. It was Jim Sinclair, who said that silver is gold on steroids. And as you can see from the breakout in late 2003, silver went from below $6 all the way to around $8.28 by May 2004. Then it dropped back to like $5.70, and then it went almost in a straight line up to 15 in May 2006. And then we had another sharp drop back down below 10 in June of 2006. And then we had another leg up in March 2008, all the way up to 2021. And then we had the sharp drop in 2008 where it went back below 10. And a lot of people got discouraged and got out of silver. The client at MF Global we had, he must have felt really good about getting out at 15. But then, of course, we saw a huge move higher. And this is where all the money is made. A lot of the money is made. Silver went from below 10 in late October 2008, almost up to 50 by April 2011. It's a huge move. So there's a lot of volatility there, as you can see, over the years, but you need to hold on for dear life, as I've said sometimes. And yeah, so that's how I see silver going forward. What about the miners, silver miners? Yes, that's a different story. And again, I have silver miners. Do I trade them? Not really. I hold them more longer term, but there will be a point where you want to take profits on the miners. Silver and gold, physical silver and gold, I think you should look at them as insurance. Of course, you might need to liquidate your gold and silver, especially if they're worth quite a bit more than it's now and you have an emergency, or you might want to buy something that you've always wanted, or you might want to invest it in some kind of business. So that's how I see it. And I think it's going to be a wild ride. And in terms of, let's say, targets, apart from those that I gave you earlier, let's look at where we could be in terms of the gold-silver ratio. Let's say that gold did go to, or silver did go to $280 by 2032, or even earlier, with a gold-silver ratio of 31, which was the low in 2011. Gold would be at 8,680 by January 2032. That's very conservative in my opinion, but if you take a 50 gold-silver ratio, if silver doesn't outperform as much, gold would be at 14,000. So yeah, that's the way I see it. You can work out the ratios yourself if you want to do it, but it's going to be interesting times in gold and silver. So I'm going to end with a quote from Jesse Livermore, the greatest speculator arguably ever. He said, "Be right and sit tight. Don't listen to the crowd. Yeah, be a lone wolf." I think, as I said, we're in for a wild ride. We're going to see some wild price swings. Maybe the thing to do is when you see huge spikes higher in silver, take some profit on your miners if you have miners, but hold on to the physical. That's what I would do. And this is not advice. This is what I would be doing.
The silver market showed notable resilience during Tuesday's trading session. After an initial dip, prices quickly rebounded as aggressive buyers stepped in, reinforcing the strong bullish momentum that has defined the recent trend. The strength of this move suggests that traders are eager to chase momentum, with short-term pullbacks increasingly viewed as opportunities to buy rather than signs of weakness. This dynamic played out clearly on Tuesday, when silver dipped briefly before surging higher. One key level to watch closely is $35.48, which had previously acted as a significant resistance point. The fact that silver has now broken through this level adds weight to the bullish case. Market participants are also eyeing the $37.50 mark, a potential target derived from a measured move projection. Historically, silver has rarely traded above the $35 level, making the current price action particularly noteworthy and indicative of a possible shift in the long-term trend. Mario Innecco emphasizes the significance of silver recently breaking above $35 and briefly touching $37, describing it as a key breakout level. While short-term pullbacks remain a possibility, he believes the breakout appears to be decisive. Innecco draws a parallel between the current rally and the 2003 and 2004 silver breakout. which saw prices rise 286% over a few years. If silver were to follow a similar trajectory, it could reach $100 by the end of 2027. The strong momentum, combined with a technical breakout through long-standing resistance, suggests that silver's move may be more than a short-lived rally. Let's get back to the interview.
Late yesterday or around midday New York time, silver was trading almost at 37, and it looks like we've broken out definitively through that 35 level. Is it possible that we go back down? Yes, anything is possible in the short term, but I've looked at some charts comparing silver and gold, and I went back to late 2003 to May 2006, and I remember that period well because I was working at MF Global at the time, and the colleague with whom I worked, we worked in kind of pods, and it was just me and my colleague Mike. He had some high net worth private clients from Norway, and we got them involved in silver, and one of them, he was already, I think, a billionaire, but he made a killing in silver. We started getting involved around $5-6, and then silver went up to 15, and he actually liquidated it, made millions, and he even spent $5 million for his 50th birthday. And he told Mike that that was from the winnings in silver. He had a birthday bash in the Adriatic on a yacht with all his friends. Mike went. Unfortunately, I had to stay in the office. But anyway, I thought at the time, why is he getting out? I think this is just the beginning, but I don't blame him. So I want to go to that period because gold really started trading higher in '02, and silver really was frustrating from '02 to the beginning of 2004, end of 2003. By that time, gold was already up, let's say, since the beginning of the century. And it was only in late 2003 that silver started catching up. And I've done a little bit of calculations here. For example, at the end of 2003, beginning of 2004, silver was around $5.30, and it was virtually unchanged since the beginning of the century, while gold was trading around 400, and it was up 45% since the beginning of the century, roughly. So when silver, broke out of this base, very frustrating base, at the end of '03 and started going up in '04, well, it took off and went up to like around 15, just above 15. By May 2006, it was at $15.24. It doesn't sound like much these days, right? But back then it was a huge move. So it was up 285.92%. So if you take that kind of time period and you transpose it to now, bring it forward to the breakout now, and I think this is a breakout. And again, this is not investment advice. So if you take the breakout as being now, beginning of June, I think we could go, if we copy what silver did back then, by the end of 2027, silver could be at $100. It might not sound very bullish to you. You might want to see $100 this year, but I'm being conservative here. I think that's the other important thing. In this wild ride, you need patience. You need to sit tight, and you need lower expectations. And by the way, I'm not telling you to trade here. I'm not going to trade this silver market. I'm just going to keep stacking because I think what's going to happen in the next few years is that the fiat currency system, of course, is going to implode, and you need to have gold and silver.
Silver's recent surge across major global markets signals more than a temporary upswing. It suggests a deepening shift in the underlying foundations of financial behavior. As investors react to a complex convergence of fragile fiscal frameworks, global uncertainty, and intensified demand for industrial applications, silver is stepping into a central role in the evolving economic narrative. Its breach of historical thresholds, alongside rising bullish momentum and renewed strategic interest, hints at a transformative phase in its market trajectory. If current trends persist, silver could redefine its long-term valuation in ways not seen in decades. Could this be the beginning of silver's elevation from a secondary asset to a dominant force in the next era of global wealth preservation and industrial innovation? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.